Whether you guys are buying your property for the first time or not, there are normally a few questions that pop up in your head immediately. Can I really afford this? How long is this mortgage gonna take? What's the interest rate like? Things along that nature. But arguably the two most important questions are, what sort of deposit do I need to drop, and what will the monthly payments be like? And that's simply because those are the two questions that are going to consistently affect your finances the most when it comes to a mortgage. By the way, shout out to my boy Nicholas, who even told me about this topic that he wanted me to discuss. So yeah, without him, you guys wouldn't be having this video. So Nicholas, wherever you are, I will give a shout out to you now. Cool. That's all that I'm giving you, bro. But back on topic. Dropping a small deposit and having a high interest rate, or dropping a high deposit and have a low interest rate, which one's better? And the sick thing about this is that the tools I'm going to give you guys in this video as you watch it is not just going to help you with mortgages, it's going to help you with other finances that require a huge amount of money. So let's get started, people.
You know what you're watching. DS Learning Finance. Whoa.
First up, let's talk about the pros and cons of both options, guys. Now, just to explain, for those of you that don't know, but yeah, you should know what that represents. The D stands for deposit and the I stands for interest. So the first case, the first column, well, second column, is basically a high deposit and a low interest rate, and the opposite one is a low deposit and a high interest rate. So what are the pros, i.e. the P section, of having that? A good thing when it comes to a high deposit and a low interest rate is that it's cheaper. In the long run, it's actually cheaper. So you're not paying as many pounds, dollars or euros when it comes to it. But what is the con of that? Well, as mentioned, is that it requires a huge amount of initial input. So when it comes to dropping that deposit, you've got to have tons of capital initially to have to get that interest rate as down as possible. When it comes to a low deposit and a high interest rate, what are the pros and cons of that? You will notice that it'll be the exact opposite of what the other case is. So i.e. swap those around basically. So when it comes to the pros of a low deposit, high interest rate, what you're basically saying is that you don't need that initial capital to drop it. So it's a low amount of capital. And when it comes to the cons of that, you're going to end up paying a high interest rate in the long run because you see more of a liability because you contributed less into that deposit. So over the long haul, you're going to have to pay more pounds and more dollars and more euros and more yen and more naira and more whatever. Yeah, you're going to have to pay more of it. Cool. So now what I want to talk about is the things that we do know, guys. This is very important. Before you guys buy a property, you need to know how long are you planning on owning that property for? What are you going to use it for? Maybe renting, maybe living in. What's it being used for? And ultimately, how is it going to affect your cash flow, these regular payments and the deposit? All of these factors play a big part in determining which option is the best route to take. But it will make more sense as I go through this video with you guys. It will actually be best if I show you guys with a graph, and I guarantee you'll understand it way more now. It's a simple graph of money spent against time. So when you have a high deposit and a low interest rate, this is actually what you have. So you're starting off there, and you're going like that. Now you can see that's a large that's a large platform to start off from. So that is basically high, D, low, I. Cool. So when you have the opposite, so a low deposit and a high interest rate, what you're actually doing is this. Continue the line a bit further. So low D, a high interest rate. That's also cool. So when you're looking at a high deposit and a low interest rate, i.e. the blue line, what you're doing is you're starting off so high straight away and then you're slowly, gradually increasing. But with the exact opposite, what you're doing is you're starting really small, but then you're drastically increasing. And that's basically the difference between the two. Now you guys could probably come to this sort of conclusion, you probably simulate this graph. It's pretty straightforward, right? But what a lot of people don't really recognize is that there is this point, and I call it point Z. I could have said PTZ. Let me recorrect that, guys. So PTZ, yeah? This is the point where they both intersect. And a little tip for you guys, yeah? Make sure to find your point Z, people. Oh my gosh. Based on what you can realistically afford for both options. And this is why one of the key things that you need to know before you buy any property, as I mentioned previously, is how long you're going to own it for. Because that sort of longevity, that sort of time frame establishes which side of point Z you are on. And this is why it's key, because you can see in the long run which route is the best to take. If you're before point Z, then guess what? That's going to be great. If you're after point Z, then guess what? That's going to be great, because now you know which option is the better route to take. According to Zoopla, which is like a huge property advertising platform in the UK, their 2017 study showed that on average people in the UK move houses once every 8.6 years. So that gives you a time frame roughly upon which you can gauge yourself. On average, most people are 8.6 years. So you can know where this point Z falls and where you may fare between it on average. But that doesn't necessarily mean it's the exact same case for you. It could be different. Ultimately, you still need to know how long you're going to be owning that property for, or at least have some sort of rough idea. I also mentioned that you need to know what you're using this property for, because chances are, if you're renting out the property, you're going to be happier with this red line, so the low deposit, high interest rate. I mean, like, that's what tenants are for, to pay your bills with high interest rates. I know, it's cold, but it's so true. Whilst if you are living in that property personally, you might be more inclined to spend more of a bigger deposit with a lower interest rate, because it's coming out of your pocket directly. This is why knowing what the property is being used for is so important, guys. In conclusion, when you look at these two factors influencing it, they both fall under the same umbrella, and that's basically cash flow. How badly do these payments affect your cash flow? That's the question you should be asking yourself. You see, for me, good cash flow actually shifts point Z further up the time axis, whereas bad cash flow shifts point Z further down the time axis. In other words, the less likely you are to feel the burden of taking out a mortgage for both routes, the better of an option that route is to take. And oh yeah, guys, make sure to do the maths, people. Don't just say, oh, it will cost this much and that much. No, create an Excel file. Or you can grab a calculator, paper and pen for you old school people. Either way, you need to do the maths. Whenever I'm tossing and turning between these two options, my aim is to literally produce this graph, a realistic version of this graph. And you'll be so amazed, guys, just how clear that makes things. And oh yeah, another tip is don't be complacent, people, like with your mortgage. It can be just like having car insurance or phone contract. The only difference being that it's more money involved and it can be longer to take applications. I guess that's a big difference. But you guys get the point, yeah? Just because you started there doesn't mean you have to finish there, guys. Always be on the lookout for a better mortgage deal with lower interest rates. There's always something out there. It's your favorite YouTuber, guys, Dami Solari. I talk about stock market investments, property investments, financial management too, giving you guys that consistent content, you know? Before you guys can go about doing whatever you're going to do for the rest of the day, say it with me. Like, subscribe, and share, people. What? DS Learning Finance. Whoa. Bye, guys.
Whoa.
Ha!